know your CPF could help you retire 5–10 years earlier than planned? This isn't just a dream. I've seen these strategies work for real Singaporeans. Today, I'll show you how to make your CPF work harder for your retirement. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and wealth building strategies. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. Many people tell me CPF is hard to understand. I get it. I felt the same way when I started. But these strategies are simpler than you think. Whether you're 25 or 45, these tips can help you retire earlier. Let's start with our first strategy: special account top-ups. Think of your SA as a superpowered savings account. Regular banks might give you 1% interest if you're lucky, but your SA gives you 4% guaranteed. That's 4 times better. Here's what makes it even better. The government rewards you for saving. You can get up to $8,000 in tax relief for SA top-ups. Plus, the first $60,000 in your combined CPF accounts earns an extra 1% interest. That's like getting a bonus on top of a bonus. Let me show you what this means in real money. If you start with $20,000 in your SA at age 25 and add $7,000 each year, you'll have over $500,000 by age 55. Now, let's talk about housing, probably the biggest purchase in your life. Most Singaporeans use their ordinary account for housing without thinking twice. But there's a smarter way. Here's an example. HDB loans charge 2.6% interest. Some bank loans offer rates as low as 1.8%. Your OA earns 2.5% interest. Do you see the opportunity? By choosing a lower interest bank loan, you could keep more money growing in your OA. I learned this the hard way with my first flat. I used all my OA money for the down payment. Later, I realized I could have kept some money earning that good CPF interest while taking a lower interest bank loan. Learned from my mistake. Let's bust a common myth. Many think CPF investments are too risky. Not true. The CPF investment scheme has strict rules to protect your money. You can invest up to 35% in stocks and 10% in gold. The rest must be in safer options. Here's a real example. Low-cost ETFs that track the Straits Times Index. These invest in big Singapore companies like DBS, Singtel, and CapitaLand. It's a way to grow your money while supporting Singapore's economy. Now here's a strategy many people overlook: using CPF for healthcare and education. Your MediSave isn't just for hospital bills. You can use it for health insurance premiums, including ElderShield and CareShield Life. This means less cash out of your pocket for healthcare, leaving more money to invest. And here's a tip that saved my family thousands: the CPF education scheme. Instead of using your savings for your children's education, you can use CPF funds. This way, you can keep your cash invested and growing. You can use it for health insurance. Let me share a real success story. My friend John, not his real name, started maximizing his SA top-ups at age 35. Every year, he put in $7,000. He also chose a bank loan with lower interest for his home. By 45, his SA had grown to $300,000. Now at 50, he's on track to retire at 55 instead of 65. That's 10 extra years of freedom. But I must be honest with you, there are things to watch out for. First, money in CPF is locked up until retirement age. Make sure you have enough emergency cash outside CPF. Second, if you invest through CPFIS, remember that markets can go up and down. Don't invest money you can't afford to lose. Also, property prices in Singapore can change quickly. We've all seen how the market can shift. And of course, CPF rules might change in the future. So, what's the action plan? Start with your SA top-ups. That's the easiest win. Then, look at your housing strategy. Are you using your OA wisely? If you're comfortable with some risk, consider CPFIS for a portion of your funds. And don't forget about healthcare and education planning. Remember, retiring early isn't just about having enough money. It's about having the freedom to choose how you spend your time. So, what's the action plan? Start with your SA, whether it's starting a business, traveling, or spending more time with family. These CPF strategies can help you get there faster. If you found this video helpful, please like and share it with your friends. Every Singaporean deserves to know these strategies. Want to learn more? Check out my video on maximizing your CPF life payout. Link in the description. Thanks for watching, and remember, Small changes in your CPF strategy today can lead to big changes in your retirement tomorrow.